Welcome to Market Momentum. All right, let's jump right in and take a look at the key trends that are really driving the financial world this week.
So, here's what we've got on the docket. We're going to kick things off with some major U.S. economic news, then see how that's hitting the stock market. After that, we'll pivot over to precious metals, and we'll wrap it all up with the latest signals coming out of the crypto space. Okay, so let's get into our first topic. U.S. economic headwinds. The biggest story really weighing on the U.S. economy right now is, without a doubt, the federal government shutdown, and its effects are really starting to spread.
And look, this is so much more than just a political headline at this point. We're talking about the longest government shutdown in U.S. history. And because of that, its economic effects are really starting to ripple outwards, and you can feel it. It's putting investors on edge.
Yeah, this whole thing has moved way beyond just some abstract political debate. We are now seeing real, tangible consequences. I mean, just think about it. Major disruptions to air travel because of personnel shortages. This kind of real-world impact is seriously cranking up the pressure on politicians to find a resolution, and maybe even as soon as this weekend.
All right, so how does all this political gridlock actually translate to the markets? Well, as you can probably guess, as long as this shutdown continues, the pressure on the major indices, the Dow, the S&P 500, is only going to build.
And what's the direct result of all this? Well, it's just persistent selling pressure. We're seeing it clear as day in tech-heavy indices like the Nasdaq. You know how it is. When investors can't see a clear path forward, their gut reaction is to sell first and ask questions later. And that's exactly what's playing out on the charts right now.
And this puts investors in a really tough spot. It creates this huge dilemma. On the one hand, if a resolution is suddenly announced, the markets could gap up, right? They could open way higher on Monday, and anyone sitting on the sidelines gets left behind. But staying invested means you're risking more losses if the gridlock keeps going. It is a classic high-stakes choice.
Okay, moving on to precious metals. Now, with stocks under pressure like this, you'd normally expect investors to flock to traditional safe havens, like gold and silver. But the big question is, are they actually providing that safety right now?
And surprisingly, the answer seems to be no. Both gold and silver are telling the exact same story, and it's a story of weakness. Despite all the uncertainty out there, recent attempts to rally have just failed to gain any real traction. What does that suggest? Well, for now, it seems like investors might be looking for safety in good old-fashioned cash, not commodities. So, let's drill down on gold for a second. Where is it headed next? If you look at the technical chart, you can see that after that little period of strength, the momentum is clearly fading. And that, of course, calls for a much more cautious outlook. Some technical analysis is now pointing to this number, 3750, as a potential long-term downside target. And listen, this isn't just a random number. The thinking is that if key historical support levels are broken, there's really not much technical structure left to prevent a pretty significant slide. It's a bearish forecast for sure, but it's one that traders are watching very, very closely.
So the big takeaway here is just caution. With the recent strength fading away and those bearish targets on the horizon, it really seems like the path of least resistance is lower. For now, patience is probably the best strategy for anyone looking to get into gold. Okay, so that's gold. But what about silver? Well, unfortunately, the picture looks really similar. The weakness we're seeing in gold is pretty much mirrored right here in silver. For silver, the key number to keep an eye on is 45. And just like we saw with gold, this represents a major long-term support level. If this downward momentum continues, the analysis suggests that this level could very well be tested. And if it is, that would just confirm the cautious outlook we're seeing across the whole precious metal space.
All right, and finally, let's pivot over to the crypto markets. Because, wow, over there, the sentiment has just taken a really dramatic turn.
It looks like the entire crypto market has entered a decisive bearish phase. And let me be clear, this isn't just a minor dip. We have seen critical support levels get definitively broken. That signals a major shift in investor sentiment. We've gone from a buy the dip mentality to sell the rally.
But there is some important nuance here. For Bitcoin and Ethereum, the drop has been so incredibly sharp that they're now considered oversold. So what does that actually mean? It means the selling pressure might be temporarily exhausted, and we could even see a short-term technical bounce. XRP, on the other hand, tells a totally different story. It still seems to have more room to fall and just hasn't shown the same signs of bottoming out just yet.
So, that leaves us with the big, overarching question, right? With so many different markets at a crossroads, you've got pressure on stocks, pressure on metals, and now pressure on crypto. Where will all that capital flow next? What's going to be the next big market rotation? That's what we'll all be watching for in the coming weeks.
Thanks so much for joining us. Your subscription and likes are always really appreciated.